Welcome to my channel. Today I am going to take a topic on interest on debentures. When a company issues debentures, it is under an obligation to pay the interest thereon at a fixed percentage half yearly until mainly half yearly interest is paid until the debentures are repaid. This percentage is usually as part of the name of debentures like 8% debentures. 8% debentures means the interest on debentures is 8%. And interest payable is calculated at the nominal value of the debentures. Nominal value means actual value of the debentures disregarding the discount amount or the premium amount. Then interest on debentures is a charge against profit. Interest on debentures is paid from profit, and this company must pay this interest on debentures whether the company had earned any profit or not. According to income tax Act 1961, a company must deduct income tax at a prescribed rate from the interest payable on debentures, and if it exceeds the prescribed rate, it is called the tax deduction at source or TDS, and it's to be deposited with the tax authorities. And the debenture holders can adjust this amount against the tax due from them. Then the accounting treatment regarding interest on debentures. When the interest is due, the enraged debenture interest account debtor to income tax payable to debenture holders account. For payment of interest to debenture holders account debtor to bank account. On transfer of debenture interest amount to statement of profit and loss account debtor to debenture interest account. On payment of tax deducted at source to government, income tax payable account debtor to bank account. A question: A Limited issued 2000 10% debentures of rupees 100 each on January 1st, 2014 at a discount of 10%, redeemable at a premium of 10%. Redeemable means it's repaid. Give journal entries relating to issue of debentures and debenture interest for the period ending 31st December 2014, assuming that interest was paid half yearly on June 30 and December 31. So the interest is paid on two periods. The journal entry for both periods we have to write. And tax deducted at source, that is TDS, is 10%. A Limited follows calendar year as its accounting year. Calendar year means the starting from January to ending will be December. Accounting year means starting will be 1st April to 31st March. Here this calendar year is taken. So 1st January to 31st December will be the closing date. Then we have to write the name of the company, book of A Limited. Then we have to draw the journal. Here in the date column, the first entry will be on 1st January 2014. Its date is given. On this date, the issue of debentures is made. The first journal entry is regarding the application money received on the issue of debentures. The journal entry is bank account debtor to 10% debenture application and allotment account. Here the debentures is issued at a discount of 10%. The actual amount of debentures is 2 lakh into 100, 2000 into 100, that will be 2 lakh. Then there is discount 10%. So 2 lakh into 10% or 10 by 100 will be 20,000. This 20,000 is deducted from 2 lakh. So the amount will be 1,80,000. The actual amount of debentures is 2 lakh discount amount that is 10% after deduction, the application money will be 1,80,000. Then the same date regarding journal entry regarding the allotment of debentures and redeemable of debentures. The 10% debenture application and allotment account debtor. Loss on issue of debentures. Loss means that actual amount is not collected on the issue of debentures. There is a discount amount on the issue of debentures, and during the payment the actual amount is not paid but is paid back at a premium amount more than the actual value. So both the discount amount will and premium amount will be the loss on debentures. Loss on debentures account debited to 10% debentures to premium on redemption of debentures. The amount on issue of debentures 1,80,000. Then here the actual amount of debentures, that is 20,000 into 100, 2,000 into 100, 2 lakh. Then the premium on redemption, that is 2 lakh into 10 by 100, that is 20,000. As I have said earlier, the loss will be 20,000 plus 20,000, that is on discount, the loss on discount on and the loss on premium amount. So 20,000 plus 20,000, the amount will be 40,000. The narration will be allotment of debentures at a discount of 10% and redeemable at a premium of 10%. Then we have given the question that interest is paid half yearly on June 30 and December 31. So we have to make the entry, first entry date, that is the June 30, regarding the debenture interest. The first entry will be relating to the due of interest. The entry will be debenture interest account debtor to debenture holders account to income tax payable. Here the debenture interest is calculated half yearly. The actual amount of debentures is 2 lakh into the interest on debentures is 10%. So into 10 by 100 into, as it is paid half yearly, into 6 by 12. So the amount will be 10,000. That is the actual debenture interest, 10,000. On 10,000, the TDS or tax deducted at source, the percentage is 10%. So 10%, 10,000 into 10 by 100 will be 1,000. That is the income tax payable. That is, have to pay the due amount on income tax, that is 1,000. Then the balance amount, 10,000 minus 1,000, will be paid to the debenture holders, that will be 9,000. Then on this same date, the payment of interest on to debenture holders, the entry will be debenture holders account debited to bank account. The amount we have already calculated, that is 9,000. Then narration, payment of interest. Then again this same entry will be we have to make the same entry regarding the interest on 31st December. The entry will be December 31st, debenture holders, debenture interest account debited to debenture holders account to income tax payable. The same type amount will be written. The date will be changed to December 31st. Then the entry regarding this tax deduction at source, that is paid to the government. The entry will be income tax payable account debited to bank account. Here the tax deducted at source is calculated for half yearly That is on June 30th, the tax deduction at source is 1000. Then this TDS is also calculated in December 31st. So 1000 plus 1000 will be 2000. So the narration, paid tax deducted at source to the government. Then debenture interest will be transferred to the profit and loss account. The date will be same date. The profit and loss account debited. The entry will be profit and loss account debited to debenture interest account. The amount that is on June, that is June 30, 10,000. On December 31st, 10,000. The total amount will be 20,000. That's all for today. Thank you.